The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. How is the volume, folks? If you'd be kind enough to just type into the questions box. Here we are, Norbert. Hello, Norbert. How are you, mate? I hope you're enjoying your lovely rural life out on the farm there with those beautiful trees. Very beautiful. Peter, thank you, and Barry also. Okay, everyone can hear me. That's a good start to the day. I'm about to say Happy Easter to you all, that today it's not really the right day, because today, of course, being Good Friday, is the day we remember the crucifixion of the Lord. Monday is the happy day when we celebrate his resurrection. So good Easter to all of you. Enjoy your break. I hope it's peaceful and pleasant for all of you. In Australia, we have a much more serious view about Easter, largely as a historical matter, I suppose, more than anything else. But we get an extra holiday. So markets are closed on Good Friday and open on Easter Monday, but in Australia and New Zealand, Monday's also a holiday. So the folks down under get a bit of a break, but not for me, because my life, of course, is ruled by the market, and looking forward to it. Rob, my friend from New Zealand, goodness me, a voice from the past. Rob H. is with us from New Zealand. He's a very, very smart guy, good trader, and gets terrific insights into markets. So, Rob, lovely to have you with me, my friend, and hope to see you again one day. As soon as the children get past the stage that they require us to be here, Mrs. Eve and I will be returning to New Zealand. It really is God's country. Okay, so today I've got some really interesting things to talk to you about. Well, interesting to me at all, at least. As you can see from our photo at last, the fat lady is singing. Well, I think that's probably premature. I think she's warming up. I think we're getting, excuse me, a bit of a yodel just to clear her lungs. But there's some interesting things happening, not only in the market, but elsewhere as well. So let's move on. I've called this webinar All Change because, let me make sure it has changed for you. Let's see if we're up to date with the files. Yes, we are. Let me see. Thank you for so many of you being with us today. It's a great turn up. I know it's a very busy time. Adrian's with us, Albert, Gary, Jay, John from Coffs Harbour, Mark. Mark's doing a tutorial at the moment. About the time I heard from you, Mark, we'll get to the next step. Murph, he's a tutorial guy. Good to have you with us. Philip, the Irishman. Good to have you with us, Philip. Rick, Sue Lee. Sue, up in Cairns. Lovely to have you with us. I hope your trading's just as good as it has been. Sue's a tutorial chick. Very honoured to have her. Of course, Sue Assini's with us as well. She's also a tutorial lady. Very, very smart lady. She's been away on business for a while. Just happy to have you back. And getting back into your trading, Suhasini. Nice to hear from you. Tony, welcome to you as well. Okay, so yes, everything's there. So I've called this All Change. We've managed to remain pretty much bullish all the way through from the 2009 lows, with occasional hope that we might get a decent correction. But I think there's enough issues coming together now to really have you concerned about your investment. For those of you who are in the stock market, I know a lot of you have 401k accounts and other investments in the market. So where are we now? Well, basically the US dollar is range bound. T-bonds are contained after that 6-month rally. Really interesting when you look at the long-term bond chart, the US T-bond, the 30-year T-bonds. That market's actually rallied for the last 6 months. The actual inference for interest is the inverse of the chart. So if the bond chart's going up, it means interest rates are going down. Now that's totally in denial of what the Fed at least said it's been doing. Equity divergences are being maintained. That's a big issue. Normally you expect when markets are making positive progress, you expect it to be confirmed by the other indices, and that hasn't been happening so much. Those divergences, they're one of those things that they're unimportant until they become important, but it's something I'm very aware of, and we're going to have a look at that today. There are some underlying support mechanisms, shipping traffic, truck sales, those sorts of issues that are causing comment, and there are real signs of a slowdown globally. Let's look at some of that, but before we do, I want to start to talk with you about the social implications of what's happening with markets, and particularly the American political situation, which is just too much fun to ignore. I mean, other issues of great interest are rugby, which will be of interest to very, very few of you, so we won't go there. But let's see what's happening with the social issue now. Trump is really should be called the patron saint of markets. He's done more to boost U.S. markets than I guess any president in modern times, at least. I'm not sure if we have enough research on history to see who else has been a market booster, but Trump is. He's a straight out market booster, and of course he's in the news now because he is all the time as President of the United States, but also the Mueller report has just been released, which I'm going to read all of it, and we'll probably have more to tell you the next time we meet. But on face value, it's very strange. At least that's you'd have to say it certainly is strange. So Trump's been a great spruiker for the stock market. He's pinned his flag to the U.S. market. Enjoyed the benefit. He's been very outspoken, very direct, but unfortunately he's going to disproportionately suffer for its fall. He's identified so much with the market. He openly states that the Fed's job is to support the market. I found that, fairly surprising. I've never entirely had that view before, but it does seem that with Trump's jawboning about interest rates, it does seem he's got a high level of influence over the Fed, which he's prepared to state. He's a real estate guy and a businessman in general, so he is particularly sensitive to any rise in interest rates, as is the stock market. We've seen the stock market have a little tantrum any time there's a suggestion that real rates are going to be increased. And Trump is more aware of that than most people because he's a highly geared real estate developer. He's openly attacked his own Fed governor for raising interest rates, and he's been very outspoken about that. He's been a marvel for business, really, with the ease of regulations that he's worked hard to do. He does struggle with international trade issues, and certainly he's got a lot of baggage from the Mueller report. I mean, the political situation in the States is just so febrile, explosive, that no matter what Mueller said, he was going to get a caning over it. But I don't think on first sight that there's anything of real consequence in there, other than to say it's a very, very strange report. But Trump's endured the worst personal attacks on his presidency of modern times. It's really hard to think of, and I'm a fair bit older than most of you, it's really hard to think of a president in modern times who's been so badly treated by the media. Disrespected is the word, I guess, and it goes beyond that. There's a real feeling of hate on the other side of the political bench. I think what we see from the Mueller report is the reality is that all this Russia business has been a total setup. instigated by liberal media, helped along by the Clinton apologists. And he's quite right in calling the Russia election claims a hoax. There's absolutely nothing in the Mueller report. Really, there's nothing that goes much further than saying he was a new guy in the job. He had a lot of other new guys in the job. Very little, zero, try zero support from the establishment. They were new, they were excited, they were ambitious, but there's absolutely nothing in the report at all that would go to criminality on this Russia business, which is a big nothing burger. The biggest failure for Trump, of course, has come from his own party. The GOP had the House, the Senate, and the presidency for 2 years, and failed to support Trump's campaign promises. That really it was McCain who cast the final vote to kill a lot of the attacks on, or the Republican attacks on Obamacare. And I put McCain in just with a few question marks. It's not does you no good to speak ill of the dead, but the reality is that for the sake of a personal vendetta that he held against Trump, for whatever reason, he was prepared to, in my view, throw away a lifetime of sober and thoughtful and balanced service to the country in the Senate to show his peak and vote against the GOP's attempts to repeal Obamacare. Ryan and Mitch McConnell were lukewarm at best to Trump. Ryan, in particular, was never a Trump supporter. And both of them, McConnell in particular, seemed much more concerned with maintaining their dignity, or their perceived dignity, as legislators, rather than being boosters in any way for what Trump was trying to do. So there's the old saying, isn't there, that a new incoming president has 6 months to get his legislation through, because after that the balance of power may not be there. And that's exactly what happened. And I actually recall Murdoch in particular warned Trump about that in very specific terms, and he didn't have Ryan with him, and McConnell was lukewarm at best, and it's been a massive failure of the GOP to get done the items that Trump campaigned on. And there doesn't seem to be much conversation about it, which is interesting, because US media turns itself inside out to cover, comment, write about the absolute minutiae of everything, but you don't hear a lot of comment that Trump was ill-served by Ryan in particular, and Mitch McConnell. So from what I've read of the Mueller report, and I've read the headlines, as I'm sure most of you have, it comes down to the end of it. You have a lawyer's take on it. Well, I've been an attorney for more years than most of you have been alive. And as an attorney, you simply read the report and say, so what? These things come down to there's either evidence on which you can lay a charge, or there's not. And if there's no evidence, the man's entitled to the presumption of innocence. And in many ways, to me as an attorney, Mueller's comments are strange, because he seems almost to be dragging his coat for the Democrats. He seems there's a massive stuff in the report that certainly gives Trump a black eye, and is more ammunition for the other side to attack him. But to reach conclusions, and to print conclusions such as that he's been unable to exonerate him. He's found there's not enough evidence to prosecute on this issue of obstruction with Comey primarily. But then he puts in a completely gratuitous comment saying that he's unable to exonerate him. I mean, that's just inviting a dispute. And of course, that left it to Barr, the Attorney General, to make the decision. And the Dems, of course, say, well, he's a Trump appointee, he's biased, etc., etc. So it's quite strange of Mueller. I'm not entirely sure what his motivation was. I think he's certainly a great servant to the United States. He's come out with, he's looked at these issues fully from both sides. I guess what he's trying to do is say to the populace at last, here are all the arguments, draw from it what you will. Well, given that the political environment in the States is just so heated, that's what everyone's going to do anyway. They're just going to believe what they want to believe. That's what happens, and that's about all of it. Terry Roberts has joined us. That's a voice from the past as well. Terry, lovely to have you with us, my friend. Hope you're feeling well. It's a nothing burger. There's just nothing there. The worst that can be said, I think, is that Trump, his acolytes, and his team was super. You look at Flynn, for example. Really, the worst thing that can be said is he was super enthusiastic. New guys, no real tradition of government, no understanding of the separation of powers of the state between the presidency, the executive, the legislators, and no real understanding of the impartiality that's in these major institutions. I mean, the FBI, Department of Justice, they have traditions of really, of course, they're biased by the president to one extent or another, but they do have a complete tradition of impartiality. And Trump hasn't understood that. Being a businessman, he's used to saying, well, these are my staff, I'll tell them what to do. If they don't do it, they're out the door. And he's failed really to understand the separation of powers and the institutional standing of the major institutions in the States. And that's about the worst you can say about the guy. On the other hand, there's an awful lot of good you can say about him. So anyway, exciting times coming for all of us, you folks in particular, because you've got an election coming up in a couple of years for president, and in Australia we've got an election coming up in a few weeks for the federal government, which I'm going to talk to you briefly about as well. And the picture you're now seeing is the old grumpy old white man. Excuse me, Bernie Sanders, the Democratic Socialist, who's having another burst of life. He did extremely well in the 2016 primaries against Hillary Clinton. I think probably the answer is he was dudded by the Democratic Party. Those of you who follow politics closely will know that the party grandees, if you like, have a large number of votes, and it's not just entirely a popularity contest. But Bernie did very well. He's also done very well financially out of it, because it's raised his profile from being pretty much a nothing most of his life to a very high-profile player. And he's done very well financially. He's now a millionaire according to his tax returns, and his books have sold well and been very great interest. And the old guy's smart, make no mistake about that. And here we are, Bernie the Socialist. Well, I think he's a grand old freak. Unnoticed for most of his political career, he's become a famous socialist on the strength of his presidential primary runs. Amazingly, for a grumpy old white man, he's generated huge enthusiasm from millennials and younger voters. You first glance, you don't really think that that's going to be his voter base, but it is. Of course, socialism is an easy sell. It promises something for nothing. In fact, it promises quite a lot for nothing. And Bernie, of course, is a proponent of that. He's advocating for massive increases in the basic wage, to $15 something as the minimum wage. If that gets through, you're headed on the path, the country's headed on the path to oblivion, and you can find a nice precedent for that in Australia, where the wage-fixing powers have been completely out of control, and we've now got a minimum wage that's in fact so expensive that we've lost almost all of our major industries other than our extractive industries, which of course are here because the coal's here, the oil, not much oil, but plenty of coal, some oil, massive amounts of natural gas, massive amounts of iron ore, and of course uranium. And we've managed to price ourselves out of all other manufacturing pretty well. It's all offshore, and that's the clear outcome of one of the clear outcomes of socialism. And there's plenty of evidence to support that. It's a nice idea, but economically, it just doesn't work. And Bernie at the moment is the front runner for the Democratic nomination, and that's causing considerable angst to the grandees of the Democratic Party, who they at least have the brains to understand that they don't, excuse me, they don't really want to go to the next election supporting a socialist. So there's lots of kooky stuff going on at the margins with the Democrats, but probably just as much with all political parties. Medicare, which Bernie's campaigning on very strongly, free healthcare. It won't be free; nothing's free, but that's the socialist ideal. It's probably an idea whose time has come. The U.S. healthcare program, excuse me. Of course, remember, folks, please, if you will, it's morning down under in Australia while I'm speaking to you. And even though Chase, as you may know, I've given up smoking, not entirely separately from your constant remarks to me, but even though I've given up smoking, and still I seem to be affected by hay fever as we have the change of the seasons here. From summer to autumn. But the US healthcare programs really are a shambles. Far too expensive, far too hard to access, and for most people it's a serious problem. It resonates, the idea of universal healthcare. It's been adopted in most other countries. We have it in Australia. Despite its socialist nature, it seems to work very, very well, to be honest with you. New Zealand's had it also for many years. They've got a slightly better healthcare system than Australia. They have a small contribution from patients. Used to be $11 was the amount that you actually paid when you visited a doctor. The rest was covered by the state. That's gone up, I believe, since I've been back in Australia. It's up to $15. Nothing like that in Australia. Tony Abbott, who was leader of the Liberal National Party coalition, as we call it, in Australia, and it's not liberal. The Liberal Party of Australia is, in fact, the Conservative Party. It's the equivalent of the Republicans, if you like. He tried to amend the budget by a number of measures, including calling for a $5 minimum charge to be paid when you visit a doctor, and all hell broke loose. One of the problems, of course, with all these ideas is that very hard to take back gifts that you've given to the populace. But getting back to Bernie, I mean, the Medicare, healthcare for all issues, anything involving healthcare in the States, it involves the biggest of all the vested interests, the insurers and Big Pharma. But Bernie's good. He's very good on his feet. I don't know if any of you picked up his interview with Fox News during the week. He was actually outstanding. But he's he's hated by the Clinton wing of the party. And I guess the question is, no one's yet mentioned it, is she the most popular Democrat who's not running? Is she going to get dropped into the convention at the last minute? There's certainly a movement within the Democratic Party to slow down Bernie's growth at you. And these guys look like they're going to be the challengers. We know Bernie, and the other guy I've called is Mayor Pete, who's a absolute hotshot. And we'll come to them, but I think this still is the real fight. I think there's an underlying issue here that's not out in the open. I think the dreaded Hillary is biding her time, and I don't believe for a moment that she's reconciled to stepping away from it all. So Bernie's the present star. Joe Biden's got no hope. He's yesterday's man. He can't win. I don't know why that's going on and on and on with him. He hasn't declared yet. I don't think he's got any chance. If the best he can come up with is to say he's running on the legacy of Obama, you can put a line through him now. So Mayor Pete's the wild card. He's the rising star. Beto's burnt out. He didn't last terribly long. Then there's the chasing herd of ladies. Elizabeth Warren, send a shudder through you, Kamala Harris, and others. But the new guy on the block is Pete. His name looks like Buttigieg, but I took the trouble of looking it up. It's pronounced Buttigieg. Apparently, according to American newspaper. I can't quite understand how you can get Buttigieg out of that spelling, but far be it for me. I'm sure that he knows how it should be pronounced. But he's got a massive personal resume: Afghan war veteran, Rhodes Scholar, multilingual, Christian, and gay. He's likely the shooting star. I don't think he can finally get on top of Bernie. I think Bernie's very likely to just be there churning away the ground. It's really interesting. It's fascinating to see these people jostling for position. I think the party would like to coalesce around Kamala Harris. She's got that desired profile that liberals will like, but can she stand up to Trump? I mean, few can. The only sensible thing that's being said about politics in this silly season is that thinking Dems are not worried about policy. What they're worried about is who can defeat Trump. And that's interesting. He's a tough nut, isn't he? Be hard to crack. I'm going to talk a little bit when we were talking earlier about non-confirmations and give you a look at Detrended Charts. This is something you may not have seen before. Detrending is a statistical method that removes the underlying trend from a time series. If you detrend data, you take away a particular aspect that's causing, it says here, some kind of distortion. This comes from a statistics textbook. It's not distortion we're trying to get rid of, it's the underlying dominant trend. If we can get rid of that, then we can see the individual movements much more clearly. You can see the fluctuations on a time series graph. I got involved in this business of detrending charts many years ago, probably 25, 28 years ago. And I had these charts on the dining room table going for, just rolls and rolls and rolls of them. And I did them all manually. It's very, very interesting, but it's far too time consuming to be of any real interest to you. And our charts that I show you regularly actually allow you to see the detrended charts. This is the S&P 500, the broadest index of our equities. And this is going to show you an easy way to see a detrended chart. And if you just adjust the way you look at charts a little bit. I'll just go back one so make another point with you. You can see on these charts that they have a series of blue lines there. They're regression lines. That's a Daniel Code trading channel, and you can see there are multiple channels. In this case, there's 3 channels above and 3 channels below the darker blue line, which is the mean of the chart. Once you've seen that, you can see that those blue lines have extensions, which are dotted red lines, which you can see here. So if you look at these as detrended charts, what you're actually looking at is the levels shown by the lines, the dotted lines. What's happening with this market, at least, it went up and made a high right at 3 standard deviations from the mean. In February, it came back, it made a higher high in looks like August. It's got the arrow with F1 under it. That's actually the first failure. And it's a failure because it didn't reach the line of the Daniel Code trading channel regression best fit. So yes, it's made a higher high, but no, on a detrended chart, it hasn't. It's a failure. And then we go a bit further, and you can see right now where we are in this magnificent rally, unbelievable rally, historic rally, all down to Trump, really. This is the second failure at the moment. It needs to get past, it needs to at least get to 3 standard deviations from the mean, which is the upper line where I put the little pinky triangle on it. That's where this market needs to get to give a confirmation of the 2018 high, and it's not there yet. So that's a very unusual way to look at charts, and I do commend it to you. This next chart, this is the Dow, and on the same basis, everything in the circle is a failure to confirm because it hasn't confirmed by reaching what the detrended chart would show. In other words, if you look at these Daniel Code trading charts, trading channel charts, if you look at those lines, make them vertical, make them horizontal in your own mind, you can see that this has all been a massive failure in the Dow, that it made its high back right at the beginning of 18. Since then, it's failed. And this failure is actually worse because it's failed on just on the simple way of putting on horizontal lines. But this thing's actually, the Dow is actually fighting itself into resistance here. It's got a long way to go to confirm. So the Dow is a massive non-confirmer at the moment. So's the S&P. As long as that non-confirmation sits there, the markets are at risk. So meanwhile, as I've said, back in Australia, you guys are looking forward to an election in 2 years. We've got one in a few weeks. And the happy-looking chappies on this page, the gentleman in the blue suit is the Prime Minister, Mr. Morrison, and the guy on the right is Bill Shorten, who's the leader of the Australian Labor Party, and destined to be the next Prime Minister of Australia. Morrison, I should say, he's the Prime Minister. His party's called the Liberal National Party Coalition. There's nothing liberal about it. The Liberal Party of Australia is actually professes to be the Conservative Party of Australia, and the Country Party, or the National Party as they call themselves now, in coalition with them, is basically the Farmers' Party, the Country Party. In fact, used to be called the Country Party, no longer. So this is the Liberal Party. I've called it the Not Liberal Party, so you'll understand, which got power from the Labor Party, which is self-explanatory, in 2013. And the guys here, left to right, this gentleman here in front of the Australian flag on the left, that's Tony Abbott. He was the first of the Liberal National Party Prime Ministers when they gained power in 2013. He's a very, very decent chap. He's a Conservative. He's a Rhodes Scholar. Got his blue in boxing at Oxford University. Good rugby player. All-round good chap. And a real true Conservative, one of the very few. He tried to do sensible things like put some charges on Medicare, put increased taxes on petrol, because he inherited from Labor a terrible, terrible financial disaster, which is normally what happens with Labor parties. They spend, and they leave a lot of black holes for whoever comes afterwards. Tony Abbott was faced with that. His treasurer then was a chap called Joe Hocking, who's now the Australian ambassador to the US. Good comment here from Rob. I'll come back to that, Rob. Abbott tried to do things that one would have called sensible, but just caused an absolute outrage. He was accused of breaking his election promises, and the media swung against him entirely because they were in love with the guy on the right over here, also standing in front of an Australian flag, whose name is Malcolm Turnbull. Now, pretty much all you need to know about Malcolm Turnbull, he's a past president of Goldman Sachs in Australia. He is a Liberal, but he's a Liberal in the sense you understand Liberal. He did lead the Australian Liberal Party at one stage when it was in opposition, and they chucked him out then because of his views on renewable energy. This is the fight in Australia, this renewable energy issue. Huge push by the Liberals, in the term you understand it, for renewable energy. We have massive investments in wind power and solar, and the money in subsidies that's being paid, because these technologies are not self-supporting. They don't make enough money to pay themselves off. So the government, which is, i.e. governments have no money, what they have is taxpayers' money, that's us. We're paying an absolute fortune for these renewables, but the push is on, and continues to be on, to be ever greater. We've got this stupidity about the Paris Agreement, that we're going to have a 26% target on our emissions. The Labor Party's aim, which Turnbull agreed with, was to up the renewables to 40, then 50%, absolute insanity. We already have such a weakened energy structure. Now remember, Australia is one of the richest countries in the world in energy. We have unlimited amounts of coal. We're about to become the biggest exporter in the world of natural gas. We have masses of uranium. And why is it that we have the world's second most expensive electricity? And the answer is because what they call baseload power, I don't want to get into this with you, but baseload power is basically coal. It's what we call dispatchable power. It's power that's available all the time and can be sent around the grid. And the big push by our left-wing friends, Labor Party, and the Greens and the tree huggers generally is to stop using coal. Well, you know, we're one of the biggest exporters in the world in coal. I mean, why would we not be using coal? To me, it's crazy. But anyway, that's the big push for the soft centre of the Liberal Party, which too many of them are true Liberals. They've torn the party apart over this issue. The happy-looking chappie at the bottom is Scott Morrison. He's the present Prime Minister. He's been a bit of a Liberal himself, but he got to inherit the presidency. The party just couldn't stand up with Turnbull anymore. We got rid of him as the only smart thing we've done the last 5-6 years that I can think of. And we've got dear old Scott, who is a lovely fella. He's a very pleasant chap. He's an ex-marketing executive, so you see he's pleasant and affable, but all he's doing is holding the hot pan, which is going to burn his fingers, because Labor is going to be the new government of Australia in a matter of months. Question from Rob. will shorten unseat ScoMo years, PM in 9 years, would shorten short on detail so far. Can cause Labour to undermine the Oz macroeconomy or more of the same? Are Oz property trends still sliding? Well, Australian property trends are going straight down the ditch. I've got an issue right at the end of this page, as you can see, Rob, saying the housing crash is happening. No surprise here. Look, Australia's been running a totally fraudulent, in my view, economic plan that's propped up entirely by massive, and I mean massive, massive levels of immigration. And we can't build the infrastructure for the number of people quickly enough. The absolute prime reason the Australian budget is still standing is because of the profits that come from immigrants. It's absolutely scandalous. They've stuffed the country full of people. At times you scratch your head and say, what are they thinking in Canberra? That's our capital. Some of the people that they're bringing in, I'm sure they are some very nice people, no doubt some very good people, but there's a whole bunch of them that you just scratch your heads and say, why would you pick those particular group of people to try and assimilate into this country, which is just the direct opposite of what is being shoved down our throats, largely with the support of the UN. It's quite pathetic, really. Anyway, we've had a Liberal National Farmers Party coalition as the government of Australia since 2013. So the end of that, Rob, is if the Labor Party does 50% of what their policy is, you'll see a economic crash in Australia that is going to be quite staggering. We're already into a strong bear market. Property prices are crashing. They're down 10, 12, 14, 15% in capital cities, Sydney and Melbourne. And without boring people with the details of negative gearing on property in Australia, if they revoke that, which the Labor Party's promised to do, you can probably add another 15% to the downside for property. So we've had three leaders, the Prime Minister in this time. They've been a total and absolute failure. It hurts me to say this, folks. I've been a lifetime member of the Liberal Party. Anyway, I'm afraid our governments from 2013 have been a total and absolute failure. Living costs are soaring. Energy is a disgrace. I've touched on that. We have the second highest prices in the OECD for electricity. And we're probably the richest, or one of the richest countries in energy in the whole world. It's just crazy stuff. Wages and earnings for the vast majority of people are stagnant. The government is, both the government and the Labor Party are both speaking with forked tongues on this climate issue. Both the parties are hopelessly split between moderates, that's conservatives, and liberals, and both of them are doing the same thing. They're trying to sell two different policies to different groups of their own supporters, and it's basically a city-country divide. City people seem to be strongly influenced by these arguments in favour of renewable energy, that is anti-pollution. They seem to be not cognizant of the economic reality, and the government and the opposition are trying to sell their green credentials to their city supporters, but try and tell their country supporters, no, of course, that's not going to happen. We're going to have coal and reliable, dispatchable energy, which is so important. One of the reasons we've lost so much business in this country is the sheer price of electricity. I mean, it's ridiculous. It's scandalous. I have a average house, 2 adults, 2 children, 2 dogs. We used to have 2 cats. Our good friend Angel left us after 15 years, which is a bit sad. She had a great life with us. We have a swimming pool, which uses some energy. We have all energy efficient lighting, whatever they call it, LED stuff. And our electricity bills are $2,000 a quarter. Absolutely scandalous. But better than some parts of the state, at least in Queensland, we have power all the time. In South Australia, where they've gone greener than green, They've got power blackouts on the menu any day, any day. Debt in this country, the Liberal National Party is supposed to be a conservative party that espouses low debt, small government, and promotion of entrepreneurial and free enterprise. It's actually done no such thing. Its real clientele is the big end of town, banks, insurers, what have you. And debt in this country is just roaring up. It's crazy stuff. Massive immigration, largely unwanted by the populace. It's one of those issues that is never actually ever tested. There's zero discussion about it on the campaign trail. Neither party wants to talk about it. They're both in agreement generally with a massive immigration policy, and they're being led by the nose by the public servants in Canberra. And the worst sin of this party, of course, was to lose control of the superannuation market. Superannuation is a forced form of saving in Australia, where somewhere between 9% for most people and 14% for public servants. They are getting a statutory, a mandatory deduction from their paychecks of this 9% or up to 14% every paycheck, and that money goes into a superannuation account, and it's matched by the employer. So there's this massive fund pool, if you like, of savings. And the idea, it's an idea from the Labor Party. Paul Keating invented superannuation for Australia. The idea is that it would be a forced method of saving for people, which would reduce the number of people who were then claiming the old age pension. Like most government policies, it's done nothing of the sort. The number of people still claiming the pensions are exactly the same, not gone down at all, and it's because the wages, by and large, is something that's totally favoured the wealthy, the people who are earning big money. There's big money in their super accounts, and of course they get very, very favourable taxation policies on their savings. So they're happy. The rest of the country's just losing 9% of its purchasing power every payday, and their wages aren't big enough to ever fund a full retirement for them. But the worst sin of all was to lose control of this by this Liberal National coalition that we have, whose real electorate, or its real people it really supports, is big business, very big business. It's there for the big end of town. It's supported by the big end of town. It acts for the big end of town, including the banks and the insurers. Well, they lost control of the Parliament for a while, and a bill got up to appoint an inquiry into the banks. It was a royal commission into the banks. And in short, what came out of it, this all happened only in the last 18 months, what came out of it is that the for-profit funds running these massive superannuation investments, mainly by the banks and the big insurers, the for-profit funds have been a total failure, full of breaches of compliance, regulatory breaches, trustees being appointed by their own client, all those sort of naughty things. And the other side of superannuation, the big funds, what's called the industry funds, that are supposedly not for profit, but of course the power to use money, big money, is unlimited. They're controlled largely by the trade unions. And this massive trade unionism in Australia is down to low as below 15%. There's actually very few fully unionised businesses in Australia. But what's actually happened is that the money, these massive amounts of savings, are now controlled by the trade unions, and that's all happened under the stupidity of this particular government that we've had. Housing crash is happening here, folks. No surprise there. This is an absolute carbon copy of what happened in the States leading up to 2007, 2008, that property prices went through the roof on the back of absolutely loose lending. I mean, the reality is the property market can be as rich or as poor as the banks want it to be. And the way banking is structured, banks have very little cost in lending on property, where they have considerable cost in other forms of lending on the reserves that they have to hold and lodge with the Reserve Bank, etc. So the banks all went mad, flat out lending. You could borrow, the story, ninja loans, 98%, 100%, 103% if you like, and as a result, housing has just gone through the roof, particularly in the main capital cities, Sydney and Melbourne, which are the powerhouses of the Australian economy. And average price of a house in Greater Sydney, and boy, let me tell you, you wouldn't want to live in what they defined as an average house, over $1 million. So you could be out hunting with more than $1 million in your pocket to buy a house, and you couldn't find anywhere that you'd be happy to live. It's just been absolutely ridiculous. That's now starting to unravel. No surprise, the bank's got a rap over the knuckles from the banking inquiry and other government policies. Reserve banks moved to tighten up lending, and there's a lot of mea culpas going on. I'm still waiting to see a few people go to jail. But this crashes down from big capital cities. It's down 11 to 13%. Probably got at least another 15% to go. And Rob, on your point, we get Shorten as a Prime Minister, which I think is a certainty, incidentally, and they bring in their changes to negative gearing, which is sensible. I support their changes. I mean, negative gearing, like the franking credit, I mean, it's just been a rort. It's been a game for those who want to play, and it's just been subsidised by every other taxpayer in the country. So I support what they're trying to do, but the timing of it's going to be pretty unfortunate. Looking at some internals for what's happening in the world, folks, this data is from Bloomberg. This is world trade. World trade is collapsing with Bloomberg's heading, and it's well supported by the document, as you can see. Global trade growth, big downturn for quite a while, but it's down, over 5% on the 3 months, month to month versus the year earlier. It's down from over 5% to zero. And the 3 month change is even more dramatic. China, big problems coming in real estate for China. You can see that there's been a lot of pump priming going on the property in China, which is very different to anything you or I are aware of. What happens over there when things slow down and a realtor reduces prices on a property to try and move some excess stock? There are riots. They'll, bash in the front window of the realtor and how dare you reduce prices. So government's pretty well stuck with that social approach, which we don't have. But you can see underlying, they've held that up with some massive malinvestment. We'll have a look at the lighter coloured line on the chart. Land sales, which of course run in front of property sales and investment. They're down to zero. So what the future growth plans for that are, no one can tell you. This is really interesting. I got this from Zero Hedge. I read Zero Hedge. You should too. It's very interesting. Very tongue-in-cheek, a lot of it, but they're smart, really smart guys. And this particular chart was in relation to Trump's latest tweet earlier this week about trying to reach a detente with, good word, isn't it? A detente with China over their trade spat that they're having. And what they were showing us is the market's been jumping up and down in regard to any tweet or any suggestion from Trump. All of a sudden it's got totally bored with that story. It's just not running anymore. Whether that remains is another matter. This is really interesting. This is soybean inspections by the Board of Trade. This is from the U.S. Department of Agriculture. have a look at the sales. Have a look at the stock, the crop that's been. This is the seed that's been inspected for sale. Have a look at it. I mean, it's just falling out of the sky. I mean, this is a reasonably short-term chart. Admittedly, it only goes back to April 2018, so it's just really a one-year chart. But boy, it's a problem for farmers. It really is. Let's see what else I show you. This was interesting too, and this is the last of these sorts of charts I'm going to burden you with. But general business conditions are down from 50% in November to 12% odd now. That is just a massive, massive drop. This is the Empire State Survey. I tend not to look at this stuff because I think most of the figures are constructed in such a way that they don't actually mean what they're trying to say. It's like the figures on inflation. If you listen to official figures, inflation is in the world, our world at least, the United States, Australia, New Zealand, Europe, inflation is very, very well controlled and it's low. They're trying to get it up. Well, what's happened to inflation? Inflation is already there. It's in the asset prices. Inflation is actually roaring. Real inflation, cost of living, buy it at the shop prices are up 12-14% year on year. But the official figures totally fail to recognize that because by design they exclude those figures. They're designed not to look at those figures. So I'm a skeptic about all government figures, but I think we have to be aware that there's enough bad news around at the moment that we could be getting to a stage that we want to think carefully about how much longer this expansion of equity markets can go on. Now, the opposite of that is not necessarily a crash. We don't see any evidence of that. And I don't see any evidence of that, which, if we're going to get a crash, it'll come from a very, very specific chart pattern, which is not there now. But we can have a very, very long, low intensity correction that goes on for years and years. So it really is time to take off your bull forever perma bull hat and think about, be aware at least of the probabilities of something else happening. This is a little note for you folks that what's happened with the equities, the E-mini, the NASDAQ, the Russell in particular, is that the volatility burst a couple of times up last year and fairly recently. Those increases in volatility have increased the margin for these products to about $6,500, where traditionally they've been $3,500 to $4,000. Now they're sitting absolutely entrenched at $6,500, and that's a lot of people can't trade equities, which is a shame because, as you know, they're a marvelous, marvelous market for trading. And in a moment, I'm going to show you some figures from our CTP program on equities in particular. But anyway, long story short, CME is introducing a new product called Micro E-minis. It is providing on all markets. You can read this here. And they're just much smaller contracts. They're about 1/10 the size of their respective E-mini contracts at the moment. So they've been totally silent on what the margin's going to be, but if it's 1/10 the size, you can expect that it would be somewhere like that production in margin. So these markets are going to have margins of probably $600-700, and in fact they've been all brokers that I'm aware of have been running day trading on $500 margin of the S&P or less in some cases, but that's for day trading only, which you don't want to get into. But that's the new product that's coming out the 6th of May, folks. So this final chart, really, I've called it the answer to everything. This is the NASDAQ. What's keeping the market up is the expansion of margin. And the markets that have the capacity to expand margin, profitability margin, are the tech stocks. So the health of this of the text. You can see it's got a non-confirmation on it as well, but it's getting there. It's not far off getting that top line, is it? Much different chart to what you've seen in the Dow and the S&P. In honor of the man who's made this chart do what it's doing, largely, I've put a picture of Trump playing golf on here to call it the answer to everything. So for those of you who are invested in the stock market, keep praying for Trump's health, and hope he's out playing a lot of golf, being healthy and happy and enjoying himself, because he's the best booster in the world at the moment for U.S. market. And of course, as the U.S. goes, the rest of the world will as well. Let's have a look at this. So this is Success, folks. This is our new trading program. We've been running the Success program for you since August the 5th. You've had it free for almost all of you for the bulk of that period. Recently, we've restricted that just to people who have subscribed to the DC website Pro package. That's the $249 a month package. And we want to give you, those of you who are subscribed to that package or about to, we want to give you two Success markets, your choice, free of charge. And my hope is to make that package, very good package, even more valuable to you than it is. So those of you who are on the DC website Pro package, that's the $249 a month, or about to join it, please advise Terry. He's at support at thedanielcode.com. He runs the website for me. Most of you know who he is. And let him know which two markets you would like added at no cost to your subscription. Now, profitability in trading markets comes from volatility coming in, and volatility is like a wave. It comes and it goes, and when it goes, markets get flat and unprofitable. So yes, you need to be prepared to change your market at various times. In recognition of that, we're happy for you to have a change one market every month, and if you want to do it more often than that, contact Terry, and we'll charge you a nominal fee just to cover the cost of doing that. Those changes have to be processed manually for us. Now, you can add individual markets at any time. We have a new package for those of you who want to trade more markets, and you can see all of those under the Services tab at the Daniel Code website. Interestingly enough, I'm about to show you the 5-year results from our CTP program, which for this purpose is programmed exactly the same as the 6S. And what's interesting is that we can't get it within 25% of what our Daniel Code tutorial folks are getting. And that difference is massive. And I've actually tried really hard to do it, but you can't get to the same level that a Daniel Code tutorial graduate is at, because there are one or more tools that our Daniel Code tutorial folks use, which can't be programmed. And that's really interesting that the deduction of one tool could have a change of more than 25%. It reduces the results of the program by more than 25%. So what have I done? I've gone to the next page. Let me go back. This is supposed to open. Let me see. Maybe I've got to come back to it. Just bear with me, folks. See if I can highlight it. No, I can't. I'll come back to it when I've finished the video. We're just finalizing the tutorial. If you're interested in being a trader, if you want to be a super trader, let me know. I'll be happy to teach you. I've taught a lot of people. They do very, very well, incredibly well. Some of them are with us tonight. Vicky has arrived. Hello, Vicky. I'm sorry I didn't notice you earlier. Nice to have ladies with us in particular. We don't have many. We value them greatly. But anyway, if you want to be a trader, if you'd like to learn about trading, please send me an email, jneedham@thedanielcode.com. with your phone number, country location, so I know where you live, so I can work out your time zone, and I'll be happy to call you and have a chat about your trading and have a chat about teaching you to trade at a very, very high level. Now, if you know absolutely nothing about trading futures, don't be concerned. The two best traders that we actually have now, both of them came to me. One of them, Frank, had never seen a financial chart when he came to me. The other one, Glennis, had never seen a financial anything and is totally uninterested. But she's got the marvelous gift that she said, well, I just trade what you taught me. I don't worry about the rest of the world. And she's up there with our very, very best traders. So if you don't know anything about trading, you're very welcome. It just means we put in an extra 1 or 2 sessions to give you the background of what futures are, how they work, setting up your chart, getting you to that stage. So do please shoot me an email, jneedham@thedanielcode.com, and I'll be more than happy to talk to you about your trading and talk about the opportunity to do a Daniel Code trading tutorial, and we do it by video, just one-on-one, you and me, no one else. If you haven't already, you're welcome to have a free trial of everything at the Daniel Code website. Free trials are now 14 days. We've reduced it from 31 days. We have a free trial of everything, including our Success programs and our 4th and 5th SEAL forecasting programs as well. Terry will arrange a free trial of you for you, I should say, at Trade Navigator, our partners. If you'd like to have a look at their charting software, which I use exclusively. This is a compliance document, folks, which is slightly blurred, but the point of it is that trading is risky, and I do beg and implore you, do not trade real money on financial markets unless you know what you're doing. And the best way to know what you're doing is to do a Daniel Code tutorial, and I will teach you. And that will, in due course, make you an elite trader. Okay, let me see if I can find that link and see if I can access it outside the realms of... here we are. That's not going to do it. We've got a link, folks. It's happening. Here it is. We'll have these up for you in the next few days. Terry's been away for a while, and I've had a few other things on my plate as well. These are the Success results for the whole of calendar 15, 16, 17, and 18, and the margins for them. And I'll scroll down slowly so you can see them all. There we are. Everything. You can see those figures. This is being recorded, so this will be up on the website if you want to look at it later. Or you can use that tag to have a look at these figures. We'll be adding in the next couple of days the year-to-date figures for you. We intend to publish year-to-date figures at the end of every month. But you're welcome to have a look at them if you'd like to join our Success program. You can just subscribe to one at a time if you want to. Go to the services page. Here you will see down here is every market that you may possibly want. The ones that we've listed so far, and we will add more. The ones we've listed are 129 a month for the smaller margins, 159 a month for the bigger markets, and we're going to offer 2 of those free to anyone who subscribed to our DC website Pro package, which is $249 a month, along with everything else you can see from the dots. It includes chart archives, live chart archives, daily TO3 signals, TO3 plus signals, members forum and the tools that work on Trade Navigator. We've also started a new membership category at $4.99 a month, which will allow you to trade as many of the success signals as you want to. Even at those prices which we've tried to keep down, they add up pretty quickly. So I know there are people out there who like to trade 5 or 6 markets or more, and that will be a cheaper option for you. So I think that's it for the time being, folks. I do hope, there we are, we actually got it to work eventually. That's grand. And I'll leave you with this most important chart of the NASDAQ, which really is the answer to everything. If that starts to get sick, the market is in trouble. Okay. So there we are, folks. I hope you have a happy Easter. Try not to think about the property debacle in Australia. If you live here, try not to be concerned about the socialists coming for you in America. If you happen to live there, we've all seen these things before and lived through far worse. So nothing to be concerned about. Have a wonderful break over the Easter holiday. I wish you all well, folks, and I look forward to seeing you as soon as we get back to work. Thank you, Sue. I'm so glad you enjoyed it. Lovely to have you with us. And I wish you a very happy Easter. Akshay, any update on DX? Index, it's very range bound, Akshay. Have a look at the Daniel Code charts. It's very range bound. The US dollar index at the moment. Easter eggs for the kids time. Yeah, Rob, thank you. Boy, the year sure goes quickly, doesn't it? All the best to you, my friend. Lovely to have you with us. Thank you, folks. Enjoy your Easter holiday. I'll look forward to talking to you soon. Bye for now.